No doubt about it. Let's take a look at what the market context is for all that, Becky. 2-year anniversary today of the all-time high in the S&P 500. That was around 4,800, January 3rd, 2022. So here is the 2-year chart. It's kind of this, hammock effect right there, suspended around the 4,800 mark. We're going a little bit of payback here for the very, very strong final couple of months of last year. 9 straight up weeks. Everybody in every statistical measure would say the market was overbought. Some of those crowded stocks, mega caps at the top of the NASDAQ, clearly had some selling pressure that was pent up in a new tax year came to bear. I would say pullbacks back to this range where we took off from in December, around the 4,550 to 4,600 level would be totally normal, not a big deal, a few percent perhaps down from the recent highs. Take a look at Apple relative to Microsoft and the broader S&P 500 over the last 2 years as well. It's remarkable how much Apple and Microsoft, for the most part, have traveled together over this period. Not the same business, similar market caps. It shows you they're viewed by the market as these corporate nation states. They treat shareholder capital very well in the way of a lot of the big trends, not going to get hurt too badly. But look at Apple actually kind of diverging to the downside here with that downgrade yesterday. Really has not outperformed the S&P 500 by very much over the past 2 years. Microsoft still flattening out, but still the favored play in not just corporate IT, but also, of course, AI. Bonds. Take a look at corporate credit relative to treasuries or also over the last 2 years. This is the bank loan ETF. It's senior leverage bank loans, as well as the high yield interest rate hedge ETF. Basically, these are gauges of credit spreads, appetite for corporate credit relative to the prices of treasury bonds. And what you see right here is the macro message from the market is credit still looks like it's priced very firm. It's not really showing a lot of cracks, at least not yet in the macro outlook. Beck.
Mike, thank you. Weird, though, just watching the Apple chart. I mean, it just shows you how quickly sentiment can change when you're looking at these things. And Microsoft is holding in there at this point. But that's a shocking and quick turn. And there's not a lot that's changed in the story.
Well, that's true, although I would argue that this is a company that added $400 billion in market cap in a couple of months, also on not very much in the way of anything changing. So it is a very flow and sentiment dependent name.
But I mean, not just Apple. I wonder if that holds true for Microsoft and some of the other big names. Like everything looks great until it doesn't. And that's what so much of this market has been run on, the sentiment. OK, let's zero in right now in the bond market.